back, folks, and we got quite a market. Doesn't even look like a large move in the context of this market right now, but since about 2:45, when I was coming on the air, S&P's just gave back 25 points. Doesn't even look like anything because we ran up almost 130 points almost in this market. We got some volatility to talk about some of the market action, folks. We're going to jump over to our man, Basil Chapman. You can listen to Basil's outstanding daily program, folks, the Tiger Technicians Hour, every morning, 10 a.m. Eastern Time for the hour. Check him out and his daily newsletter, The Opening Call, folks. An outstanding newsletter. You can subscribe. It comes with a 30-day money-back guarantee. You gain access to many great webinars that Basil has done for his subscribers, and we got some volatility in this market. Basil Chapman, good afternoon.
So I thought I'd start off with the volatility. I concur with you. This can't all be over in a moment. There are a lot of peripheral things that are going on. But it is interesting that you have had quite a bit of a pullback in the gold, and you have had a pullback in the crude oil. But look at this volatility index. For the last couple of weeks, I just want to know, are you there?
Yes, I have you, Basil. I'm looking at it for sure. I got your VIX.
Okay.
It's why, yep.
Okay. So for the last couple of weeks, if you're looking at the volatility index, it was very hard to define what made the volatility index pop to the 23 level back on the 5th of Feb. About a week later, it pops up to 22.96. I mean, there was talk about Mag 7 weakness. This is the real big caps, the AI. But actually, there wasn't anything to really pinpoint. And I've been talking about since December the 24th at 13.38. I've drawn in this trend line, this little Chapman Wave Inside Track Propellant Zone, and you've got higher highs and higher lows. And I said, well, definitely there are fund managers that are buying the volatility index because they are buying insurance. So with that said, yesterday was a very strong move to the 24, just about 25 level in the volatility index, and then we landed up today at 28.15. But now we can talk about Iran war. We've got that as a title. I always put a title on all these VIX spikes. There wasn't really a title for the last couple of weeks. Now we've got it. So that's number one. Number two is, look at the pullback that we've had. So I was saying that on Friday I was saying, unless there's really a major something that happens that really is not an economic thing like interest rates or jobless or something, but something else. If there's a really
like a
big
war,
spike,
Basil, like a war.
Then,
no, I have to write that. Pretty amazing. I know.
And
word up. Hey, go ahead, please. Yeah.
War, right? So that's something you just cannot dismiss. You can't say, "Oh yeah." I mean, this is something very serious because it pertains to an intransigent. This is a country that has just refused to go along with anything for decades, not years, but decades. So this is very important, number one. Number two is you can't expect that it's just going to all be over in a day. So I believe this volatility index, I've got this in a weekly leg C. Usually, for a long time, I never considered the Chapman Wave methodology the only thing I didn't was in this emotional index, which is the volatility index. But for the last year and a half, it's amazing how many times, certainly the short term, we've actually got peak Ds and Es and F, and then you've got that major turn down. So this says to me that there's a good chance that in the weekly chart, even if we pull back, even if today was kind of a climactic, very short-term move to the upside in the volatility index, and then together with the markets going to lows and then turning around, that was a huge turnaround. The weekly chart is suggesting that it's not all over. So I wanted to just put that out to say, from my work, what I really wanted to talk about was first just to explain how the volatility index was moving up without anything really tangible. Wow, now we've got something tangible. Right, got that.
Isn't it cool? And I appreciate you bringing that up. I just want to add to it that, we had talked about the VIX, right, that it's going up. And, we all kind of knew that tensions were flaring over there. They were supposedly talking, and they were. But it wasn't a shocking event that, it's the magnitude.
Correct.
Definitely. War, 6 dead Americans, it's shocking. But the point being that, man, the market was recognizing a bit in that VIX. Even if we as traders maybe weren't recognizing it, isn't that kind of, I was just trying to digest. I said, and sometimes, folks, it doesn't mean that it's a magic ball, but it's a reflection of all of our emotions to a certain degree, especially that VIX. And guess what, man? People were saying, you know what, I'm buying insurance here. Is everyone paying attention?
That's right. And these are not just people; these are fund managers. You can see this is big buying
money
that's been going on.
So it's been quite a rise in that VIX. Go ahead, yeah.
So the next thing is, I always talk about gold for years. Your dad, the gold expert, I always used to say to him, Tom, I look at gold as a geopolitical. It's really an icon. It comes into focus when things are just real tough, and countries, not just fund managers. These are countries that are putting huge amounts of money to work. So you can see that gold, even though gold has had a huge turn down, the story's not going away. So we've kept our gold position, small leftover gold position from way down. We've kept that, and we've kept our silver position, because this is, I don't think this is one and done. I think this is a continuing geopolitical situation. Now, the next thing is this. I've been talking about this for a while, and one of the reasons we took quite a lot of finally took off some positions that we've had for ages, like Bank of America. We took a 52% profit. We can always get back in, but I didn't like the turning over of the XLF and the SPY, and I've shown you that chart, but I'd like to show you this first. The Dow has arched over in the daily. So it's in a sell mode, but the weekly chart hasn't even gone to a sell signal, but it is arching over, and that's something that I've got to note. And the trend line, which was just barely touched once before back in November, has been hit again. So that's the weekly chart, but the 9 is still very strong. So technically, and what I've been saying, it has to be an exigent something or other that really turns the market down, because technically the Dow weekly is great and the monthly is fabulous. Look at the S&P.
Look at that monthly, right?
Quickly. Look at the S&P, sharp move down, sell mode in the daily, but the weekly chart did make a peak D, but it's only arching over, and the 9 is still very strong. Look at the QQQ, much weaker. This is I have webinars on these different techniques that I talk about. I've spoken about this rectangle formation. If it goes to within just a short distance of the left side high, or right on or just above, and then arches over, takes out the halfway marker of the rectangle, you've got to be careful, because you're probably going to go down to the low. You can see that the 9-3 moving average has gone pink for the very first time in the QQQ since, I think it was April. And the monthly chart is still strong. IWM, look at this, IWM, still holding very well. Isn't that amazing? This is the Russell 2000. And
talk about volatility today in that Russell. Wow, yeah.
But look at it, it's holding. The weekly chart is still very good. Now, this is the big one. So I always talk about the financials. The financials have been rolling over somewhat. I'm a little concerned about that. I think it's as important as the Dow Transports when you've got the financials going to all-time highs with the Dow. They're kind of rolling over. But look at the semis, holding very strong. But I'm watching this very closely, because at down 14 at 391, we did have a short position. We took it off. I made a little bit of money, and I still might go back into it. But at 391, if it takes out the low of the 4th of Feb at 374, that's going to be a problem. So as it stands, the technicals and the weekly charts are still very good. I think we've got choppiness. The daily charts are still going to hop around up and down, but we've raised a lot of cash. We're ready to do some buying as soon as the VIX gives us that signal.
Perfect, and we'll watch that VIX. And you heard it, folks. He's got cash ready for the next positions. Check out the opening call. Great webinars. Comes with a 30-day money-back guarantee. Basil, thanks so much. Look forward to the show tomorrow.
Thank you very much, Tommy.
We'll come right back, folks.